I'm joined by Diane King Hall to take a look at some of the more movers. This morning, we're seeing the chips rallying. I was just having the conversation that as I was looking at the chips and the story popped up about Goolsbee, and the chips dropped when he said there was uncertainty, didn't know about rate cuts, and chips went down. Today, now maybe, I don't know if rate cuts are back on the table if the government reopens, but also you're getting some positive news on chips.
Yes, certainly some momentum and positive developments in terms of how analysts are seeing the chip space, and you're seeing them power up this rally today. You mentioned SanDisk higher, Western Digital, Seagate getting some love from the street today. Loop Capital raising its price targets on Western Digital and Seagate, pushing WDC to 250. Seagate to 190. They see hard disk drive demand growing in 2026. Meantime, Barclays is raising its price target on SanDisk from 39 all the way up to 220. They are still keeping an equal weight rating, saying that the company's better visibility is driving growth durability. So again, you've got Barclays raising its price target on SanDisk. Palo Alto getting some love from Barclays as well. They've raised their price target to 230 from 215. They're keeping an overweight rating on this shares ahead of their earnings report, which comes November 19th. And Seagate, its price target over at Loop Capital raised to 465 from 350. They are keeping a buy rating on the shares. They see hard drive disk capacity demand moving higher into 2026, with selling price increasing for higher capacity drives. Speaking to that end, I'm seeing some reports about SanDisk raising its prices for NAND flash chip prices by 50% for November. That's the kind of memory that's used in the USB drives, memory cards, etc. So it signals this tighter supply-demand dynamic. I've been hearing this from different analysts within this AI growth story. It's not so much the demand, it's the supply side and where are the choke points. AI data centers just really gobbling up every chip they can find, and the kind of components to make those chips. So wafer supply is limited, so manufacturers can't easily ramp up production. So the benefits are memory producers like a SanDisk, Western Digital, Micron, etc. Today, again, the coverage that we're seeing is analysts becoming more constructive on SanDisk, Western Digital, Palo Alto Networks. Nicole.
Understood. I mean, it's incredible. And by the way, we just had on Wayne Kaufman, who liked the group. He picked, I mean, his names that he picked Seagate and Lam Research and such. But he also said that one of the sectors he would like if he did an ETF was SMH. And
that
triple Qs, so he does like that. And SXD, which were some of the bigger ones, so he does like that group very much. Let's get to health insurance stocks.
This is the flip side, right? They've under some pressure today. Centene, one of the hardest hit. United Health under some pressure. This comes after some Trump commentary, essentially slamming how federal funds for healthcare are distributed. This happened in a series of posts on Truth Social, proposing that President Trump proposing that the hundreds of billions of dollars directed toward what he called, quote, big bad and money-sucking insurance companies under the Affordable Care Act should be sent directly to the public. He says this reallocation would enable individuals to purchase healthcare services and retain additional savings. He says the money, quote, must now go directly to the people. The people can buy their own much better policy for much less money. So this is a sticking point. There's been a battle between the Trump administration and this government shutdown between both sides of some challenges and things that the Democratic Party wants to see with the Affordable Care Act. I know there's been some progress on the shutdown. At the same time, this pressure from President Trump is putting pressure on Centene. That's sliding this morning. Molina Healthcare, that's down this morning. Elevance Health also under some pressure. United Health as well under some pressure. And keep in mind, these Affordable Care Act plans are subsidized by the government based on income. They include this risk adjustment pool that reimburses insurers. And so the insurers have benefited as well. Democrats have wanted to extend the subsidies, but it looks like that is not a part of this equation with regard to reopening the government, where there is some potential resolution on the government shutdown. So the pressure is on the health insurers this morning, Nicole.
Okay, and last but not least, we look at CART earnings.
Yeah.
Let's look at this, hitting a 52-week low last week.
It did.
What's the story now?
So they put out their report, quarterly report card. The guidance looks better than expected. So that has been helping the stock this morning, but it's turned back now. Right after the numbers came out, the stock was indicated higher, but it's under some pressure. So it looks like an extension of the losses that we saw, that 52-week low last week. They missed on both the top and bottom line. Adjusted EPS coming in at 42 cents. The street was looking for 50 cents. Revenue coming in at $852 million. The street was looking for more than $934 million. Now, orders did climb 14% year over year. That actually topped forecasts. Revenue was actually higher, even though it was weaker than expected. That was driven by grocery and restaurant delivery demand. They did say average order value did fall by single digits. They lowered basket minimums in order to waive delivery fees and attract more consumers on their platform. It's part of this affordability push to keep customers sticky here. In terms of the projections for the holiday quarter, they're projecting gross transaction value GTV between 9.45 to 9.6 billion. Nicole.
All right. Thank you, Diane King Hall. Good luck there. And by the way, as you were speaking, the S&P continued even higher. Now we're up 1.14%.